Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In yesterday's lesson we looked at the head and shoulders pattern and the reverse head and shoulders pattern, two reversal patterns that you look for at the end of uptrends and the end of downtrends to signal their reversal. In today's lesson we're going to look at a specific strategy with entry and exit points for how to trade those chart patterns. So let's get started.
Okay, so let's start by looking at the strategy for trading the head and shoulders pattern. There's our head and shoulders pattern that we looked at in the last lesson, and the basic strategy here is we're going to trade the break of the neckline. If you remember from our last lesson, once the neckline is broken, the pattern is said to be in place, and if you're looking at an uptrend there and you see that, then there's a good indication there on the break of that neckline and the formation of the head and shoulders pattern that trend is going to reverse. So we're going to look to enter short on the break of the neckline. The target for the trade we're going to get by measuring the distance from the head of the pattern to the neckline, and then we're going to project that down from the break point of the neckline. So after entering the trade on the break, we're going to place our stop loss just above that right hand shoulder there, which is considered the closest resistance. So you can see there how we're trading support, the break of support, and then we're placing our stop loss just above the nearest resistance level. So let's look at it here. So we get 430 points by measuring the distance there. We project that downward after entering on the break. 430 point target there. We place our stop loss just above the right hand shoulder. For further confirmation that this is a good trade or good pattern to enter on, traders are going to look at two things. Firstly, they're going to look for a downward sloping neckline that you can see here. We have in this pattern, as this is further indication that the market is reversing. If that neckline was upward sloping, then that would be a sign that this might not be a good pattern to trade this time. But since it's downward sloping, it looks like it's a good one to trade. The second thing they're going to look for is declining volume on each of the rises up. So volume on the head should be lower than volume on the first shoulder, and volume on the right hand shoulder should be lower than the volume going up into the head. Lastly, traders are going to look for increasing volume on that break of the neckline to verify that that's a valid break of the support line there. Okay, so the reverse head and shoulders is basically the mirror image of the opposite of the head and shoulders. We also are going to get our projected target by measuring the distance from the head to the neckline. We enter on the break there of the resistance this time, since we're flipped upside down. Project our 610 point target from the break of the resistance line or the neckline there, and then put our stop loss just above the right hand shoulder there, as that is considered the nearest support level. Okay, so you can see how that's sort of a flip or mirror image of the head and shoulders pattern. Similarly to the head and shoulders pattern, on the reverse head and shoulders pattern, traders are going to look for decreasing volume going into the head, and then decreasing volume again going into the right hand shoulders. And this time, instead of a downward sloping neckline, we're going to look for an upward sloping neckline to indicate and give us further confirmation that this is the pattern's in place and that this might be a good pattern to trade. Also, similarly to the head and shoulders pattern, we're going to look for increasing volume on the break of the neckline as further confirmation that that is a true break there. So that's our lesson for today. You should now have a good understanding of the head and shoulders pattern and the reverse head and shoulders pattern, as well as a strategy for trading each of them. In our next lesson, we're going to finish up on reversal patterns by looking at the rising wedge and falling wedge patterns, and then we're going to move on to continuation patterns after that. So we hope to see you in that lesson. As always, if you have any questions or comments, please feel free to leave them in the comment section below, and have a great day.